Hey all, welcome to ShareTreck. This is Raj here. Hope you guys can hear me clearly. And if you do, just please mention out in the chat section, hi hot dog, good morning. Okay, let's get started. I think the indices are looking green right now, but they could turn red very quickly. I don't want to sound like a perma bear, but overall, I think nothing much has changed. Thank you, hot dog. Nothing much has changed. The uncertainty premium is still very high, in my opinion. That is because nothing is clear with regard to the tariffs. Do we have worldwide reciprocal tariffs? How is it going to be monitored and implemented? Do we have tariff holidays for just the auto? And while that is on, is everything else postponed until April? And how long will the auto tariffs remain? Nothing is that clear because Trump might change his mind anytime. And on the Canadian side, the very interesting dynamic is that Mexico waited to declare their tariffs. So they have not yet declared counter tariffs. But in Canada, we have already declared tariffs on 150 billion worth. And our premier in Ontario, Doug Ford, he has already announced a 25% tariff, export tax on energy because we export a lot of electricity. And he has said that it's going to remain until the tariffs are decided one way or the other. And therefore, now Trump is in kind of a corner and he has to find a face-saving way to come out of all of these things. So I expect that there will be a distraction somewhere and somebody who will be scapegoated so that he can come out of this situation, which is with his image intact. The problem is that for us in the market, it's creating a lot of issues. Now, many of our viewers are not Americans and they are investing in the American market. And one of the reasons why people end up investing in the American market is because the number of companies that you get, the number of sectors that you get is immense. The volumes in the stock market are immense. And therefore, you are able to get really good quality companies. You are able to get a lot of opportunities during the day to make money. And then the question becomes, why is the United States the biggest capital market? And then the answer to that is the US dollar and US soft power. US soft power created after the World War, where US played a big role in ending the war, was with the Bretton Woods and the gold standard, and then another president, Nixon, withdrew the gold standard when people started asking for gold in exchange of dollars. And now here we have Trump, who is diminishing the soft power very significantly. I think withdrawing troops from various parts of the world is the first step. And then regardless of the history, I mean, Japan and other countries in that peninsula are being told you have to take care of yourself and you'll have to pay for our military assistance and all those things. All those kind of activities are undermining the soft power of US. And this tariff row right now, it has, I think, structurally undermined the soft power of United States, which means that countries like Europe, Australia, and other parts of the world, including Canada and Mexico, they are now thinking we can't rely on United States as a reliable partner, either in commerce or in defense. And therefore, Europe, I think, is going to do its own defense facilities, and I think European defense stocks are soaring. And Canada is looking at other markets. Mexico is also looking at other markets, though they may not talk about it that much. And already you have the BRICS out there, which was against the United States right from the beginning because of exactly this reason, because their funds got frozen and appropriated. Europe is doing the same thing. It is using frozen Russian funds to pay for the Ukraine war. So whenever these kind of things happen, United States dollar as a reserve currency faces a lot of problems. Now, all of this can ultimately lead to eroding the capital market in the United States, and that money has to go somewhere else. and the contenders are markets in Europe, and maybe UAE might come up with a stock market which may attract global capital, and they may provide some kind of stability and certainty. So all those things are all possible, and I think it's about time that US got its act together, started mending fences, and the Republicans start to do something to get control of the situation. So I think that was a long diatribe, but I think that is underpinning this whole thing. So in this environment, there is going to be a zigzag, whipsaw. We don't know what the big institutional investors are doing, but I'm pretty much thinking that they're all taking their money out. And there was a lot of physical gold delivery, so probably a lot of money will go into gold. We'll check out the gold prices as we proceed further. But one other thing is very clear: many retail investors have liquidated their positions. So that's what we have out here. Next, let us look at what's going to happen today. The non-farm payrolls and unemployment rates are going to come in. And if this number comes weak, then it's going to be a problem for the markets. Earlier, what used to happen was, if employment numbers came weak, people were very happy that the high interest rate will start going down. And when the interest rate starts going down, the markets will go up. So this was the outlook. Right now, I think that if the employment rates goes down, the market is going to look at the lofty earnings projections that we have for all these companies. And they are going to say, if the Fed is reducing interest rates, then it's not for a good reason. So if the employment rates goes down today, then the market is not going to like it, and there could be more sell-off. That is my personal opinion. And those on the live stream, please comment and let me know what your opinion is. If the employment rate doesn't come out well, do you think the shares will drop? I think so. I would like to hear from you guys. With that said, we have a minor rise, and already you can see Dow has gone negative, and I'm betting that NASDAQ and others are also going to go negative. And let us look at the share market itself, because everything is priced into the market. So it's good for us to look at the market and save some time and a little bit of blood pressure. So let's go to the futures, NASDAQ futures. Let us look at the chart. The way the chart looks, right, it's actually a double top, I would say, maybe a double top. You can look at that, start looking at that right now. We have a support out here at 20,038.50 as it was yesterday. And we opened up higher in the futures pre-market, and we have started steadily going down, which means with every passing minute as we come closer to the opening bell, the pre-market participants are second guessing themselves. And I am suspecting that this line is going to become deeper orange, and it's going to be long as well. And we have plenty of room on the RSI to go down, even to go to the 30. So somewhere down the line, I think we open red and then we bounce back up and we end the day higher. But we'll still be a red candle. That's what I'm thinking. And if we do not break through this support, that will be a good outcome for the day. But if we did break through this support, then we have this whole huge pocket supporting us. And what is significant is that yesterday we broke down below the 200-day exponential moving average, and that's not a good thing. And is this the 200-day exponential moving average? Let's have a look. Let me go here to settings and see. Yes. So it's the 200-day exponential moving average. We have broken down below that. So I'm bearish right now. Starting now, I'm quite bearish about NASDAQ. And I've already got Tesla shorts in place yesterday. And let's look at S&P 500 futures. And S&P 500 futures, the market is already open. It's fluctuating between negative and positive. But we are still above 5,738. If we break below 5,738, I think we are going to be totally bearish out here as well, because we are below the 200-day exponential already. And the 200-day exponential is at 5,742. So we are flirting with that 5,742 out here. So if we break down, it's going to be a very strong support for S&P 500. But if we break down, I think we are going to see a dead cat bounce later during the day, towards middle of the day, I suppose, and then we'll bounce back up again, trying to break through above this horizontal line of support, which becomes a resistance, and also this 200-day exponential moving average, which will become a resistance. So that's the story for today. And I'm looking at a head and shoulder pattern out here. I'm just going to draw this out. Of course, all of these are speculations, my friends, because these are all probabilities we are talking about, and this may or may not happen. because I'm looking at things bearish, I'm searching for bearish patterns, and I'm seeing this pattern out here. And earlier we had done a double top target, and we already achieved the double top target of 5789.75. The question is, are we going to go down further? So how will that differ? So what I will do is I'll remove these lines out here. Let me take this off and expand this a little bit. Oh my God, I'm on a wrong kind of indicator out here. This is gone. So I'm going to take this one off from here. And what I will do is I'll draw a line up to here, the middle. Let's go and look at the probability where we are going to end up. This is done, and then we clone this, change the color a little bit, and then pull it down. Oh, this is wrong. Clone, change color, bring it down. So we are looking at a drop of up to 5,516. This may or may not happen, so please don't hold me to it. Now let me look at the comments. Inf is saying, what's up, 35 minutes until jobs data. Are you going to cover the data release? Why not? Why not look at the data release when it comes out? I don't know what I can say intelligently about it. I'm a retail investor, remember, but we can have a good time speculating about that. But I'm thinking that if the employment data doesn't come out right, then we could go all the way down to 5519, because this support out here along with the 200-day exponential moving average is holding up the S&P 500. Dollar index is going down. This is good for other currencies because they'll get a little bit of a respite. Let us look at USD, Japanese yen, and try to see where we are. We are very far away from the 130 mark I had put there for the unwind trade. But we'll also look at what happens in Japan. If the Japanese economy strengthens up a little bit, then that could bring that line up for us a little bit. So we have to keep on watching this. Let us look at the 10-year yields. They are along with this diagonal line of support. They have dropped a little bit. This is good for the stock markets, but they had dropped earlier. They touched this line and they are back up again. It's down 0.44% today. We'll see what happens when the day comes to an end, but we can already see that the MACD is moving towards a signal line to cross over. And flight to safety generally happens as long as you have belief that US dollars and US treasuries are the safest place to be in. With $32 trillion of debt and an erratic administration, and without knowing whether US is in part of the free world or it's going to be aligned with Russia and China and North Korea, you know, all these things may come up suddenly. Now, if you look at this area itself, right, let me just draw another scary thing out here. 1, 2, 3. So if you put the bear hat on and start looking for bearish symbols, you can see those kind of things. I don't want to jump ahead of myself. I would wait for this to play out after the employment report. So let us see the employment report. Let's not get too scared, because technicals are just pointing to possibilities. What will really happen is very fluid, because we don't have a regular kind of a government. It's a different kind of administration. Let's go on to indicators next. We have indicators. Dow Jones. The way we ended yesterday was above this line of support. And then we still have the 200-day exponential waiting for us at the bottom out here. So there is a lot of support for Dow Jones index, but pre-market we are already down 0.99. Are we going to hold on to this support at 42528? Well, it all depends on the employment report, and if the employment report is good, we'll bounce back and then we'll test the support at 42913. And if the employment report is not good, we are likely to break through this support of 42,528 and then test the support of 42,346. And if we manage to stay above this support, we are going to test the resistance again at 42,528. So that's the very short-term outlook I can give with a good deal of certainty. And then if you look at S&P 500, S&P 500 is in a very critical stage. The only support it has got is the 200-day exponential moving average. And if the 200-day exponential moving average does not hold on to it, then it could fall down further. Now, just to get an idea of up to how much it can fall, I would say that one thing that I can see here directly is that we could have some kind of a support out here. I'm going to move this up a little bit. and put it down. I'll put it somewhere out here and say this could be the support that we can look at. The other way of looking at a support, I'm just setting this up for future. I'm not going to do it right now. This could be a head and this could be a shoulder. So this is what I am thinking that I would probably try to use to guess where we could probably stop. And the Japan carry trade in general is a huge enigma at the moment. Yes, I agree with you, hot dog. We should just keep a look at it. We don't want to get scared too much. You look at the MACD and you look at the momentum, everything is down. It's all set up for a dead cat bounce at 30%. Is it going to happen within the 30 minutes of the market open, or is it going to happen during the mid-afternoon? I don't know. But basically, we're going to open, go down, and then jump back up again. That's what I think is going to happen. Then look at Russell Index. Russell Index is also weak. It's up 0.19% in pre-market trade, but look at the MACD and the momentum. It's already bounced back up. It had a dead cat bounce at 26.08, which is this green candle, and then it has come back down again. It could go back again to 26.08 and then jump back up again and create another green candle out here. That's quite possible. Bitcoin reserve, no taxpayer money at risk. Yeah, these are all shiny objects when it comes to Trump, right? He's like a child who is playing Batman or something like that. He's just going to throw some shiny object here and there. He would probably rename some military base or something, try to distract you, or create even more controversial things, 2 or 3 more of them, so that you forget the past issues that were bothering you. So yeah, you are right. I mean, all these things are shiny objects. I mean, it doesn't make any sense. Even now, those kind of crypto which has been confiscated, they are still with the government. They're not anywhere else. He's just putting a label to it. He's a marketing guy. He's going to take a piece of beef and put Trump beef on it and say, this is the best beef you'll ever have. So, yeah, this is all distraction, in my opinion. Let's go on to NASDAQ. This is the most important one that I'm looking at, and we have already converted one of these supports that we had earlier at 20,352 into a resistance. So that's become a resistance. Today we are 2.79% down from the previous trading day, and we are at 20,052.63. We saw that the futures was slightly positive, but I'm betting that we will definitely be negative when we open up. We have this 200-day exponential moving average, which we breached yesterday, which was another bad thing that happened. I'm just going to extend this line of support out here just to be thorough. We have a very strong support out here, but we have already crossed that point on 5th of March. So now the support has been broken up into 2 parts. And if we come down today, this is going to be the candle just adjacent to this red candle out here. And if I make a straight line down, the support for today is 19,707. Are we going to have that long a candle? I don't know. We have done that in the past. So there is a good chance that we may come down here and then bounce back up again, only to test this diagonal line of resistance. And then we have another resistance out here at 20,352 that we have to test. So I think that it's not looking that great for NASDAQ this morning. Put call ratio is neutral. VIX is going up. Volatility is going up. In the past, we had gone all the way up to 2753, and that happened on 18th of December. And if you go to NASDAQ and look for 18th of December, you see that we were here and we had this huge drop on 18th of December. And how big was this drop? Let us look at the candle. It was a drop of 3.57%. So if we did get a drop of 3.57% from here, where does that go? So I'm just replicating what we had before. The 3.57 will take us to somewhere around 716 points down and all the way down to 19,344. So this is the worst case scenario, I would say. This is what I'm thinking. And then let us go on and have a look at XLP, the defensive sector. It's doing very well, and it's kind of formed a cup and handle pattern, I might think, or maybe it could If this extends, you could have a reverse head and shoulder pattern. We'll see how this develops, but XLP is the place to go if things go bad. So that said, let's look at gold. Is gold improving? Gold is up 0.22, but I'm still thinking that it has got a minor line of support out here, and it may probably drop down before jumping back up again. It's still very bullish. It's got the 21-day exponential supporting it. And let's go on to have a look at our AI. I'm not going to look at all of them. We know the general trend where it's going. I want to look at NVIDIA. NVIDIA is in a bear channel, which has got this support line, which I have drawn recently. I drew it up this morning, and I think this is going to be a good support line. And even before this support line is invoked, we have got a heavy area of buyers out here, in my opinion. And the upper bound of that is 109.28. We better not drop below that. The pre-market seems encouraging. We are up 0.72, but the MACD and the momentum leave a lot to be desired. So I'm thinking that we may probably open up, but we'll form a red candle today, and probably we may bounce up from 109.39. But if we didn't, there's a whole lot of support out here, and it's going to be very difficult for NVIDIA to fall below. So I might try to do some dollar cost averaging out there. Even though the PE seems very rich, I could add to my NVIDIA stake out there. Next, I'm looking at AMD. AMD is up 0.34% in pre-market trades. MACD seems to be improving, but the momentum is very weak, and momentum has got a lot of downward kind of pressure, in my opinion, because we have been going down significantly. So I'm thinking that AMD may probably open bright, but it may go down. In case I want to get a couple of shares of NVIDIA at these prices. Yeah, sounds good. Intel is down 1.16%. I don't see much happening for Intel except talks about NVIDIA probably getting manufacturing from Intel. But then there are other experts who are saying Intel technology may not match the needs of NVIDIA. So I really don't know what is happening with Intel. I won't touch Intel. It's looking very weak on the charts, and it could fall down further. And where does it get support? So it has a ultimate support at 18.87. It could probably get a little bit of support out here at 19.78. And then I'm looking at SMCI, which is down 0.97%, and MACD momentum, both are looking very weak. Pre-market is also weak. It's likely to go down further. And then Meta is also looking weak out here, totally weak everywhere. Dollar cost averaging possibility, because PE is starting to looking good, but it could drop down even further, because it's already broken down below what I thought was a really good support, which was at 636.76, and it's still not showing any positive signs. The only saving grace is that we are above the 200-day exponential moving average. Let's look at Microsoft, which is down 0.35%, and it has not been able to break up above 399.89, and today it's in the middle of yesterday's trading range. It's down 0.35%. MACD was mending itself, but if the overall sentiment turns out to be negative, then we may probably go down. I'm going to draw a trend line trying to connect some lower highs and see if we can have a trend line out here. So let me pull this out further. So I would go with this trend line. Of course, this is an outlier out here, but this trend line kind of fits. I'm going to make this a red trend line. So I would say that if we come all the way up to 397.67, I think that's the limit for Microsoft, and then it's going to come down again. So that's what I'm thinking. Inf is saying what a difference a day can make. All these super strong stocks from Tuesday, Wednesday are very weak now, like SMC and Meta. Yes, it's all the dynamics of the market. Apple is down 0.18%, still riding this diagonal line of support all the way down on a bear channel, in my opinion. We are in a bear channel for Apple. MACD is bearish, momentum is below average, so I think further downside is in order. The support that it's going to get is this diagonal line of support, and then I would say that there'll be a minor support somewhere out here for Apple. I would draw the line out here and say this is somewhere that Apple would get support, and if it did break down from here, it will bounce back up from 232.76, which is what this is. Then look at Amazon. Amazon is coming down again. There is a trend reversal out here. It's in a bear channel, in my opinion. Pre-market, it's down minus 0.27. I still have Amazon longs with me. It's very, very negative. It's around 15 or 20% down. I don't want to look at it, but I'm holding on to it. It will turn around. It's too late. I don't want to book the losses. I have the support at 195.64 for Amazon. I think it's going to come down there and then bounce back. If you look at the MACD, it's still bearish, but in the momentum, we could still have a bounce back, just like we had the last 2 days at 30%. We could have a green candle coming up, but I'm thinking that for that to happen, I think it will bounce off from 195.64 or maybe a little bit before that. And having said that, let's look at Tesla, which is what I have. And in Tesla, you can see that we have this huge area of support. So I would be very surprised if Tesla manages to break down below this, but there's a good possibility for Tesla to go down because I think there's a technical and fundamental justification for that. The fundamental justification is that Teslas are being burned across the world, showrooms are being vandalized, there is a lot of protest against Elon Musk, and that is being taken out on Tesla. And I'm hearing that many people who are owners of Tesla are finding it a bit of a security issue, that their car might be damaged, so they might be selling Tesla. All those anecdotal things are there. The other aspect is the political impact of Tesla CEO Elon Musk across the globe. Like, people don't like him in many parts of the world, and there are advertisements coming up on bus stops equating Tesla to an supremacist or something like that. So all those things cannot be good. So those are all the geopolitical impact on this stock. And then we have Elon Musk himself, who is doubling down on things which are not very popular. And if you look at the technicals out here, what is in favor of Tesla is this huge area of support. But now I'm thinking that if people who bought Tesla, if they are having second thoughts of letting go of Tesla, then they might want to rethink, like the stockholders also might want to rethink. So what I'm betting is that this, if you think the green area out here has got a particular intensity, I'm thinking probably that intensity is not that high, because many of those people would have already sold off, and that's the reason why we have been seeing this rapid decline. So this thick area of support may not actually be so strong. That's why I have drawn up two support areas, one at 255.72. I think this is the actual support for today, through which we may bounce back. And if we break down from there, then we are going to look at 241.74. So those are the two supports that I am seeing for Tesla. And the other technical which is pulling it down is the reverse head and shoulders, which takes me to 231.02, which is below this area of support. So to cut the long story short, I think this area of support was there anecdotally, but I'm thinking that many of the people out here have already sold off, booked their profits, and that's why we are seeing this rapid fall. So in reality, there is only two supports out here, one at 255.72 and the other which is going to be at somewhere around 242.39. That's what I am saying. Let's look at Google. Google is looking very attractive on the PE, so Google may get a little bit of a bounce, and it may probably reverberate within this area of support. So I think I would like to dollar cost average on Google if I see any weakness today. I tried before, I couldn't buy, I'll buy today. Then we are looking at Qualcomm, which is down 0.17%. Not much to say. Chart is looking weak. Oracle is also looking very weak, and oh my God, Oracle is looking pretty weak. There is this huge gap fill to be done, and I think it's aiming to do the gap fill. Everything is looking weak for Oracle. So if there are any Oracle shorts, I would definitely take. Full disclosure, my wife works for Oracle, so I do not have any shares of Oracle. She may have it in her employee stock option kind of a thing, but I don't have any of them, and she doesn't have any of them in other areas of the stocks. So non-farm payrolls in 15 minutes. Thanks, David. Thanks for the heads up. We'll go back into that. I'll hurry up. AVGO looking weak. Palantir, I think Palantir should drop further. There is a gap fill to happen out here, and there are a lot of supports on the way. Just going to convert this support into a resistance. I think we are marching on our way down for Palantir. Nvidia is up 1.61%. Nvidia longs in pre-market, but I don't think that's going to last. Let's go on next to look at the one that we want to see, which is going to be Rigetti. Rigetti is up 0.82. Yesterday, even though it looked really wicked, it managed to bounce back up again. MACD is on the mend. I'm going to wait and reserve my opinion on that. SMR is up 0.88%, but SMR is getting weak because of the news from China that they have got better AI that does not need so much of power and other things. If that turns out to be true, all these nuclear reactors and other things are not going to take off very well. The Mag 7 will have to think of how to beat those Chinese in that kind of a game. And they may not go for more of NVIDIA kind of Blackwell kind of chips. So that's the thesis that plays around for these nuclear reactor companies. AV is down 0.20. It made a very big comeback yesterday, but I don't know what's going to happen today. All the uncertainty with this administration is playing off on that. Then let's look at JD. My friends, I bought JD. It's in the negative today. I'm hoping that it can pick back up again. I had a support peg for JD at 43.59, but it's already fallen below it. I bought 100 shares. It's down 200. I'm still thinking that we are in play for this double bottom, so I'm going to hold on to it. I'm thinking that it will touch 51.26. I'm in the loss out there, but yeah, it was my decision. I bought it as a thinking rational adult, so I don't blame anybody for that. Let's look at genomics, Verve. What can I say with genomics? Again, it's all going to go down. I'll just look at 2 or 3 shares. CRISPR Therapeutics, it's down 0.16% in pre-market trades. It's still got support at 42.84. If we break 42.84, I think we have got a mild support out here, which is going to be on, I would say, 40.73. Then I'm going to look at Grail, which is something that some of our subscribers are buying and are holding. I think Grail is weak today in the morning. It's down 0.60%. MACD momentum, both are not in support, and it's broken down below the minor support that we had out there. So I think the next stop that it has got, I would like to draw 2 stops for it. One stop is going to be out here, and the other stop is going to be out here. So these are the 2 stops that I can draw for Grail. And if it falls below that, if it falls below this stop here at 31.70, then it's going to come down to 23.95. Then we got Prime. Let us jump that. Let's go to Altimmune, which I hold. Altimmune is down again. My God, this is terrible. It's also not showing any catalyst nearby, so I'm not happy with that. Bluebird is up 2.75%. I was totally wrong about it going towards $3. So I take that back. I don't know what's happening with Bluebird. Maybe $3 plus a little bit of premium on the potential $6 gain if they meet their target of 600 million sales. That's what probably could be in play. I don't think it's going for this gap fill out here, but let's go on to look at others. Let's look at Illumina. Illumina is up again 0.39%. It's trying to consolidate and form some kind of a base out here. And if Trump comes to a compromise with China, then we could see Illumina jump up overnight. So Illumina, if it wasn't for the price, it's still very expensive, 84.65. I'm not saying expensive in terms of valuation. I'm talking about my portfolio. I cannot afford 100 of those shares, and I'm not able to find any Illumina longs which are cheaper. So I'm going to let this opportunity go. Then we have Vertex. So Vertex is still on the bull channel. It's up 0.08%. It gave up some gains yesterday. I still maintain that it's trying to come and touch this line of support out here. And it's a monetized company. It's in healthcare sector, so it will do well. So having said all of that, let's go and have a look at the economic calendar. Non-farm payrolls. The forecast is 150 and the consensus is 160K. And the previous month was 143. So if we come up to anything below 150 or 160, I think the markets will start tanking. And if we come below 143, then I think everything will break loose. That's what I'm thinking. Guys, share your thoughts. Do you think a bad employment report is going to tank the market? I think so. I want to have your feedback. So Hot Dog, David Best, Inf, just let me know what you think. Meanwhile, let's go on and have a look at, okay, Inf thinks definitely. Hot Dog and David, please share your thoughts. So in currencies, I'm going to have a look at Bitcoin. Max says, please look at KOLD, WBA, BTC. Okay, Max, I'll do that. Let's finish off the Bitcoin out here. BTC is at 89,360 or something in that range. So let's expand this chart, come back here so that we can see the line clearly. So I think we are somewhere out here. Bitcoin is all over the place. I think Bitcoin is linked with NASDAQ. If NASDAQ falls, Bitcoin is falling big time. And same is the case with Ethereum also. It's getting support from the diagonal line of support out here, but it would break down and come down further. Max, I bought a little bit of JD yesterday, 100 JD. It's at a loss. I'm not blaming you or anybody. I still think that it can bounce back up and go towards 45. So I'm holding it right now. It's down around $200 in my opinion. So that said, let us look at KOLD. What is KOLD out here? KOLD. Pro shares, ultra short, Bloomberg, natural gas. Natural gas shorting. Whoops. Yeah, the chart is looking ready for a bounce back. It's at a very bottom, but it could go down further before going up. And if the job market spooks, I think that energy requirements will all go down because there'll be layoffs and people will be traveling less and buying less and stuff like that. So I'm not really sure. I've never thought about natural gas in detail. So Max, I'm sorry about that. Let me look at the next one you have. You got WBA. So I'm going to remove this from here. I'm going to put WBA. Walgreens, WBA, is it a head and shoulder or is it a, okay, I won't try to see any patterns out here. First of all, let me draw some trend lines and get started with what is very apparent. So we got a trend line out here which says that it's on bull channel. So that's one observation I can make. Now next I'm going to have a look at the MACD. MACD is moving towards the signal line to cross over. Pre-market it's up 6.6%. That's a healthy jump. So probably the MACD is going to mend. We were at average when we closed yesterday, so we're going to be above average on the momentum. So the day is looking good. So in that case, what I would like to do is to draw another line of support, a trend line out here, and say this is the bull channel on which we are operating, and we are below the 21-day and the 200-day exponential moving average. So we are out here and we may probably get support from this diagonal line of support, and that diagonal line of support is at $10.53 at the bottom. So that's going to be the bottom for this, and the top for this, the resistance today, I would peg the resistance today somewhere out here. So the resistance is going to be 10.83. That's what I have for you, Max. Yes, hot dog, you remind me the right thing. These are all probabilities. You have to wait and watch. Maybe you get a little bit profit, or you may not get a profit, but you will be much safer that way, and you limit your downsides and you'll also limit your upsides. But you will be safe. You won't lose your capitals. So you are right, hot dog. We have to react, and we should not try to gamble out here. What I'm saying here is the probabilities. That's all. It may or may not happen. Then let's look at WBA and BTC. Bitcoin, of course, I just checked out Bitcoins. I think there's no point looking at Bitcoin. It's tied up on the hips with S&P 500. Both are going to go down together. Both are going to go up together. So that's what I have out there. Let's go and have a look at the economic calendar and see what's happening. We still have 6 minutes. So friends, what I'm going to do is, unless you have any other tickers that you want me to have a look at, I'm going to wind down this, go have a breakfast, and come back again and see if I can do something in the pre-market session where I have a sure thing. I don't see anything that is a sure thing today. I don't know what's going to happen because, first of all, Trump may come up and say something which is going to change the market. And then we have this non-farm payrolls. We already saw ADP was weak. It came down to 75 instead of 140 that was expected. So that was a big letdown. Maybe that's already priced into the market. And if we came down bad and it was in line with the 75K, then probably the market may move sideways or maybe even have a relief rally. So that's a possibility. So that's all I have here, my friends. So David Best is saying 60 to 70 days within weeks, if not days. 60 to 70. 60 to 70 for what, David? 60 to 70. I think you're talking about JD. Okay. Bitcoin. Okay, 60 to 70 within days. Let me go to Bitcoin and try to understand what Hot Dog is trying to say. Where is currencies? Yeah, currencies is here. And Bitcoin. 60 to 70K. Okay, I get you. So where do I have my support? I have a support at 80,514, and then I have a support at 76, and then I have a support at 73. So I was more or less focused on the support at 73. It all depends on the volume of S&P 500 falling down. If S&P 500 starts picking up before Bitcoin comes down, it may come up. No committed dollars from Trump, no catalyst drive it higher. I'm thinking that Trump is totally clueless and he's not listening to people around him, and he's doing erratic things. So we are in a very dangerous time. I've got a lot of cash on the sidelines. I'm just going to wait and watch. Let's go on to the economic calendar and let us see what's happening here. And I suppose that in Bloomberg also there'll be somebody watching the economic calendar out here. Let us see if there's any live going on. Treasury Secretary Besant. 4 minutes. Non-farm employment payrolls. So we're going to see it live out here. I'm going to create another window. Out here, and let it be. We'll just wait here, or else we may lose the non-farm payrolls. Oh no, Sandeep, I'm not ready to deploy anything. As Hot Dog reminded me, right? We should react. If the market starts going up, I can always latch onto it by buying a stock that I like, which is going to be Google, and I could buy Nvidia longs, which is also there, and yeah, so those things I can do. On the Canadian side is where I will be investing, and it's always a little bit behind the US side, so it gives the opportunity to get in at a later stage, so I can avoid losses there, but I may lose a whole lot of profits. But I'm a long-term investor, so I'm going to get back my long-term investing portfolio, which I emptied it out in order to book all the profits. So I want to build it back again, and this is the best time to do it, and that should be fine. So that's what I'm thinking. Let us see what happens out here. We got 2 more minutes to come. Ever considered buying AMD? No. I don't want to be risky. I have a retirement portfolio, so I will not touch Intel. I will not touch AMD. That I'm absolutely sure about. Okay. Now this will start having some animations out here. We'll have an animation which shows graph like this getting formed, and that should happen anytime now. We've got 2 more minutes to go. Meanwhile, let us have a quick look at the indices, index futures, and see how they are reacting. Are they betraying nervousness? Yeah, they are betraying nervousness. You look at this candle out here. This is today's candle, 7th of March. We started very high in the pre-market, and we started coming down. And right now we are just 0.8% or 0.7% high. So AVGO. Okay, I'll have a look. I didn't see anything spectacular out there for AVGO, or maybe we didn't even touch upon it. So AVGO earnings, EPS up 6.12, revenue up 2.05. Did they say anything about future outlook? If they have a positive future outlook, then that would be good. Adjusted earnings, etc. There is nothing mentioned about future outlook. So I think it could have a dead cat bounce, but it all depends on the non-farm payrolls. Yeah, we have started seeing unemployment rate 4.1. It's above the forecast. So this is not good news. This is not good news. 151. This is above expectations, above the forecast. That's also not good. Let us see what's happening out here with the futures, how the futures are reacting. So the futures are going up. The market has taken it in the stride. So probably that 75K was already priced in. So the market action, pre-market action was more pessimistic and they're picking up. So I think that it's looking positive for the market. I would like to wait and react. Hot dog is right. We have to wait and react. When we don't know what's happening, we have to wait and react. I don't know how much of that 75K ADP report was priced in. So I think this 151K is above the forecast. That's not good in my opinion. Unemployment rate has gone up. That's not good in my opinion. And hourly earnings has remained same. And hourly year over year 4 is below the forecast, which indicates a weakening economy, and a weakening economy is not good. I'm thinking that the market has to go down. So if it's moving to the contrary out here in the future session, I'm pretty confident that it will come down. I want to hear from you guys. What is the benefit of having you all out there if you don't share your thoughts? We are all retail investors here. Nobody is an expert. I have openly shared my thoughts. Please let me know what you think. I am thinking the markets are going to go down. The result was not good. I have taken a stand. What is your stand, guys? Remember, I have a YouTube channel. I'm taking a stand. That's a big risk for me. Okay, Inf is saying this might be shorts covering. Why would they cover the shorts if the market is bad? In fact, they should double down. That's what I'm thinking. If it's what I'm not challenging you, Inf, you could be right. I'm just saying that with my knowledge and thought process and experience, I am thinking we are breaking this support out here at 20,038. Hot dog is saying unemployment rate up may lead to better chance of rate cut. David Best is saying 151,000. 151. David, are you talking about Bitcoin? What are you talking about, David? Less than expected. Oh, you're talking about 151K employment. Okay, less than expected. 151K. Non-farm payrolls is higher than forecast. Okay. Payrolls are expected to increase 170,000 in February according to the Dow Jones consensus forecast. Okay. So can you give your conclusion? Do you think the market going down and breaking 2038? David, what is your thought? I'm thinking we are going to go down today. Hot dog is thinking we are going to recover. Inf also seems to be thinking we are going up. And David, what are you thinking? Are we going up or are we going down? I'm saying we are going down. David, you have to make up your mind. Come on. Throw me a bone here. Hot dog is saying not sure. Yeah, see, that's the difficulty, right? But you go ahead and make a guess. We are not saying you got to buy something, Hot dog. You just make a guess. I'm thinking that it's going to go down based on all the factors that I have. Because even if, let's look at it this way, even if the unemployment report was, equivalent and there are no surprises there, we still have the uncertainty premium hanging over us, right? You don't know what Trump is going to do. You don't know the outcome of tariff. And actually, Canada is putting Trump into a corner. We are saying that we are not rolling back any of our tariffs until you say the tariff battle is over. We want no tariffs. Renegotiate USMCA next year. That's what we are saying. So Trump has to agree, and if he agrees, he loses face. Trump doesn't like to lose face. So we have to see something extraordinarily spectacular and stupid happening, a new shiny object. And all of that is going to push this market down. That's my logic. based on the current market that we are in here. In this market, I don't think technicals and fundamentals matter. It's all the soundbite and what the press runs with. Come on. David, we are waiting for you. Is the market going down or is it going to go up? I say down. Inf says up. Hot dog says not sure. Hot dog is now thinking that he has a feeling it will drop and market makers will push it back up at close. Yeah, that's what my technical analysis kind of gives as the best probability. We go down, touch a support and then bounce back up and then touch the resistance which was previously the support. Maybe breakfast time for David. Yeah, it's a breakfast time for me also. You are reminding me that I'm hungry. So David, please put your comment quickly. I want to go and have my breakfast. I'm very curious what you're feeling. Is the market going down? See, this is the difficulty with the markets, right? And as a content creator, you can appreciate how difficult it is for me psychologically to tell you stuff, right? But it's making me a better investor in my opinion because I'm doing less trades. And having this discussion with you makes me also feel that, I shouldn't be overly worried. Everybody is in the same boat. And I hope it does the same for you guys also. We are creating a small retail investor community out here. Nobody is a genius. Nobody is a fool. No judgment zone. We'll see what happens when the market opens. So David, please put your comments sooner rather than later. I'm signing off for the day. Thanks Hot Dog for joining me. Thanks Inf. Thanks David. And thanks Max for joining us. Max, you also put your own thoughts out here. Bye for now.